Well, good afternoon, good morning, good evening. Welcome to Crypto Talk with Brianna and Scott. I'm Scott. Hi, Brianna.
Hey Scott, how are you?
I'm
You have a
doing
good
good.
Thanksgiving?
I had a good Thanksgiving. Yeah, my son came up from Missoula, and he's been studying for the bar. So it was he said that he would set up and be able to study while we're watching football. Well, he got here and immediately went to bed. went to sleep because I guess he was up all night trying to study or couldn't sleep or whatever. So he got up. We had dinner. But yeah, it was good. We watched football, and I was trying to be good. I had a nice plate full, a little bit extra turkey, one piece of pie, and I thought, okay, I'm doing pretty good. But then I had to go back for a little bit more pumpkin pie. What you gonna do?
Hey, I'm right there with you. I am usually pretty good, and I was just like, I cannot wait for Thanksgiving dinner, and I'm going to indulge, and I did, and oh man, was I tired after that meal? But yes, it was very good.
Yeah, yeah. Hey, can you see back here behind my head? Listen, I'm gonna go this way. Do you see that red flower back there?
I can see it. I noticed it earlier. I really like it. What
Okay,
does it mean?
it's an amaryllis, and it has been the coolest thing. We got them at Costco when it came in as a bulb, and you put it in this little pot, and in literally 3 weeks, it went from nothing into that. And it's funny if I hold it up there, you can kind of see it.
Uh-huh.
And it was so fun to watch because first just these big, huge green stalks would grow, and it got huge, like about 12 inches, maybe 12, 13 inches. And then all of a sudden the flowers started to pop out. There's a whole nother stem that will have another flower pod come out, and usually there's like big four blooms on each one. I've never really done anything. I've never seen anything like that. And it would literally in 4 weeks grew from nothing into that.
That's so cool. It always amazes me. I'm getting to be a better plant mom.
Yeah.
But I have multiple ones. There's one I've had for years that's taken forever to grow, but it's still alive, so I'm doing good. And then I'll have ones that I'm just like, I feel like I should can watch it grow because every
Yeah.
day I'm just like, man, it's incredible. It's incredible. But yeah,
It
that's
is.
really cool.
I've never had a plant. I mean, I've had plants and stuff, but I've never been able to see them grow. So to do that was really fun. And I was just like, I don't know. I felt like a kid because I was so excited about this thing.
Yeah.
Every day I would check it, and I'm like, okay. And you don't have to water it much. Just yeah, it was pretty cool. Costco. They probably have them out there if you're looking for a fun gift.
Yeah, that is a good idea. I'm keep my eyes open for that.
So what's going on in crypto this week? What have you been doing? What do you got on your radar?
Oh man, well, I don't know what's going on with the whole SBF FTX thing. Time will tell. I don't know. He's like SBF is scheduled to speak on the 30th. I'm a little bit confused. Like, what's going on? I've
Wow.
seen some pretty like interesting stuff. He's people getting footage of him running, like roaming around uh, in the Bahamas, and it just there's funny stuff that people can come up with, but it is a serious matter. But I also, what comes to mind for me throughout all of this? For one, I bring it up regularly that just the point we are in history just is mind blowing to me, and it's super exciting times. And there's one point that I think it was a quote or something it was actually in your book, Scott,
Wow.
The Year of Your Life, that always sticks with me. And it has since I saw it. And it was the first time that I saw it. And it was one that you had reiterated in your book. I believe I want to say that it was in Japan that they say that crisis has multiple meanings, one of them being
Mhm.
opportunity. And that
Yeah.
just always kind of comes. Do I have that right? Is that
Yeah, it's Chinese actually, and
kind
in the book I have the Chinese symbol, and it means both things, crisis and opportunity at the same time. Yeah, it's a cool quote.
so that pops in my head very regularly,
Yeah,
especially right now.
it's a good point. That really I hadn't really thought about that, but that is a good point. This is a perfect example of that, and I would agree with you. But go ahead and explain, what you mean by that, or what you think it is.
Well, okay, these are significant times in crypto, turning points, really. And it's a lot of people were really hurt by this.
Hmm.
And a lot of people were just like shocked by this. And still, I mean, many people, even really experienced investors, I think, were really shocked by this. And it seems like, and the further we kind of dig into at least what's being brought out with SBF is it's like, man, like there could have been a lot of corruption with this. But what it's also doing is it's shedding light. It's shedding light on the corruption that may be existing, along with the basic principles of both Bitcoin and then decentralized finance and crypto, and kind of bring, it's not just the hot times of the bull run where everybody's just jumping for joy, and it's really bringing in those like bare minimal principles, and I think that's really good. Because I think what people will start to do is kind of wake up to like what I hope so, anyways. Like what are these differences, and why are these investors hurt here in these central exchanges, and how do you avoid that? And there's been a major emphasis that I've been seeing on the differences. People really pointing out the differences between Bitcoin and between crypto. That's kind of the Bitcoiners are really wanting to kind of break that tie, but then also between decentralized finance and and CeFi. So we're seeing I think a lot of people that I'm seeing who are talking about what's occurred with SBF and FTX, and then bringing the light to and the understanding of trying to give that knowledge away. That here's why this happened, and there's differences here, and this doesn't represent crypto as a whole. This represents fraud, and
Yeah.
that happens anywhere. At least that's kind of how I'm viewing it. I don't know. What's your view? What's your take, kind of right now
Yeah.
on what's happening in crypto?
Yeah, it's similar to yours, in that I do think that the crypto industry will be in better shape after this shakeout, after things settle down a little bit. But I agree with you that the whole crypto industry is being tarnished, has been tarnished, and is viewed certainly by people that don't follow crypto that often, as a negative thing. And what frustrates me is that the mainstream financial media is so entrenched in the old ways of doing business. Now, let me preface. I do see some. There's a guy, Charles Payne, on Fox Business. He actually embraces it, and he reports on it, and he seems fairly knowledgeable about it, and he's willing to always give it the benefit of the doubt.
but it's very few of them that do that. And so they lump crypto in with all this, and so then they see these headlines, and this is juicy stuff. I saw today that there's already a documentary in works, or even a dramatic show on the works that Amazon has bid for, and the creators of the Marvel shows are the ones behind it. So it's going to be
Wow.
entertaining, put it that way. And so that's interesting because it's entertaining and kind of a juicy topic. You've got this young kid who kind of fooled everybody. That's interesting to the average person. The commingling of Alameda and potentially, his girlfriend running it, and her dad being, connected to the SEC somehow. I mean, that's all an intrigue. And that the money's missing, they don't know where it all is. That's certainly an intrigue. You've got the Bahamas government that got involved, and was going to take over and had some money transferred, that SBF transferred some of that into the Bahamian government. That's not clear exactly what happened. So there's all these little intrigues, and so the mainstream media and the financial media are going to pick that up, and they're not going to really understand it. They're going to paint crypto as dangerous and volatile, and one of the big things is they're saying, oh, it needs to be regulated, and they just leave it at that. Like, all of it needs to be regulated. Like, shame on you. And also, it's like, shame on you, crypto people. It's like, you crazy, risk-taking people. It's like, you thought you were going to get away with something here. I don't know. There is this finger pointing that I feel like the people that are in crypto, that are interested in crypto, are somehow guilty of, because we don't want regulations. Well, that is also far from the truth. A lot of us do want some regulations. There are clearly people that don't want anything to do with regulations. There are some OGs that definitely don't want that. Some decentralized extremists, if you will, maybe Bitcoin maxis, I don't know. But I, for one, have always welcomed some regulation, and I do think it's very clear that there needs to be some. And what I would really like to see is maybe regulation can delineate the difference between decentralized finance and centralized finance. I did a video that I just put out, I think yesterday, that I tried to sum up what I thought had happened in this last 2 or 3 weeks, but I also really let loose, on some issues that I was really frustrated about. And one of it was regulations. One of them is SEC, and the fact that not only were they kind of butting up with Bankman-Fried, and I guess I'll give them the benefit of the doubt. Maybe they were trying to, just use his accessibility, he was sort of a big deal at the time, to help understand crypto better or whatever. But as we sort of know now, Sam was basically trying to make FTX, look good in this, and that other areas should be, regulated, that he would have the least amount of regulations. That's sort of the sarcastic view, and I've heard a lot of views about that. I'm still not 100% sure that that's exactly what was the case. I still believe that this was partly a case of a kid who just got ahead of himself. A group of kids that, and I say kids because they were all, really young. And as we know now, very inexperienced. And they, as the new FTX chief CEO says, we're inexperienced and had no business, running a business like this. They didn't put any traditional corporation and accounting rules in place. And so it really was just this kind of frat house kind of in the Bahamas. But they were able to really fool a lot of people and make a lot of momentum. And we're doing some good, for sure. I mean, Sam was wanting to give away a lot of his money, certainly to more liberal and democratic causes, which is fine. But it's interesting when you look at some of the articles now coming out, especially in the mainstream media or even in the crypto, they kind of put that in a negative view. Like, here was this kid, he was just throwing around all this money that he didn't really have, or, really wasn't his to throw around, maybe. Again, a lot of it's all speculation, but it's all negative for the most part. And so I would really like to throw a lot of it back on the regulators. And so I'm just gonna keep going here because I'm kind of in the middle of something here, and then we'll open it up for other things. But one of the things that I really started to understand and analyze based on some videos and other podcasts and so on that I'd watched was really how incestuous, there's another word, that this situation really was about all of these CeFi companies that were lending to each other and borrowing from each other. And when Terra Luna collapsed and it really started to take out Celsius and Three Arrows Capital and some others, I think BlockFi and a few others, we all pointed the finger. I did specifically at these CeFi companies and was really trying to distinguish at that time the difference between CeFi and DeFi. What I didn't really understand was how bad it really was. I thought it was just a few of these little companies here and there that were trying to take advantage of it. And I didn't understand that what this really was, the way I view it, were financial people that maybe grew up and were doing business in the traditional finance. That when crypto started to creep up and people realized that it was a valid place to invest, and again, if I take the negative view, they looked at this as an area where they could make a ton of money, do some semi-shady stuff, and they wouldn't get caught because there was no regulation going on in crypto. So they set up these shops like, well, I'm going to throw Celsius in there too, even there are a lot of crypto people that like him or liked them. But Three Arrows Capital and the company called Genesis, which is a huge player in this, that behind them was Digital Capital Group, which is another huge player in the crypto space, but all institutional, right? So that's the other big issue I want to make sure that's clear, is that most of the bad stuff that's going on was institutional organizations taking advantage of the crypto space with high volatility and high risk, but also high reward and no regulation. And they literally took advantage of that. And this is what I didn't quite understand and was never able to articulate until now, is that these companies took advantage of everyone because the SEC didn't get their shit together and create some regulations. Now, part of it was crypto was pushing back. We're like, don't slap all the same regulations that you have on traditional finance onto crypto. And I think what was observed by the mainstream media that way was that we don't want any regulation. And that's not the case. And maybe we didn't articulate, as I've never really heard anyone articulate it really, really well about what should and shouldn't be regulated, other than don't make every coin a security. But now it seems pretty clear to me that all of these opening holes in the background allowed these CeFi companies to do all this stuff behind the scenes. And I'm sure that stuff goes on in traditional finance but to a lot lesser degree, because there's a lot more regulations. They can't do that stuff necessarily in traditional finance because there's laws against it. So they came into crypto where there weren't these laws and did shady things. And maybe even didn't start out that way. They were just trying to take advantage of the volatility and the high risk reward in crypto. But because there was no transparency, they weren't doing all their transactions on the blockchain, especially the front end where all the money comes in and lending back and forth to each other. That wasn't on the blockchain, and it's nowhere. And there's no regulations. So nobody was looking into that. That's frustrating. And I put that on the SEC for the most part, and just greed. And so people are, this Barry Silber, who's the chairman of Digital Capital Group. I don't know. He seems to have a okay reputation in crypto. And again, I don't know enough about him and his organization, but he's heavily involved in Celsius, which is a subsidiary or part owner of DCG. They are a main player and allowed a lot of this to happen. And part of it has to do with the what am I trying to say? The Bitcoin trust fund that Grayscale had. And it gets a little deep when you start looking into this, but basically because the laws wouldn't allow us to have a true ETF where you would buy into a security or a fund that would mimic exactly what Bitcoin was doing. You had this trust, which, from what I can understand, it didn't correlate one-to-one with the price of Bitcoin. So the price of these shares of stock that bought Bitcoin could go up and down, and the shares of stock wouldn't necessarily rise and fall at the same level. So what happened at the beginning of this, Genesis was one of the few corporations that could actually mint these shares of this, Bitcoin trust fund, basically. And when Bitcoin was up, the shares were up, and they made a ton of money. They were making a ton of money. Well, when Bitcoin came down and the crypto market came down, those shares went completely underwater. And none of them wanted to take the loss. So instead of reporting a loss and just going with it, like you would have to do in traditional finance, I'm pretty sure, they just didn't do anything. They just let it ride on their books. And then they went out and borrowed a ton more money, which we don't see. It's nowhere, for the public to see, to invest in even riskier assets in crypto to try to cover their losses. And it failed because the crypto market didn't recover. There was lots of investment in these made up coins like FTT. And, Binance has their own coin that's just made up out of thin air, the BSD coin. The BNB coin, I think it's called now. And it's doing fine, but there's still nothing really backing that. But FTT, partially because CZ and Binance let the cat out of the bag that they were going to sell all of it, which probably started this whole cascade of the FTX thing. I'm really just throwing stuff in here, but this is how it's all connected.
There's so many moving parts, aren't there?
There are, and it's sort of in my head, and as it's coming out, sort of random, but they're all connected. And really, it all started with the Luna. This all was going on for years, 2020, 2021. And when Luna crashed, it upset that apple cart and started this whole cascade. And Three Arrows Capital and Celsius crashed first, but FTX was doing the same thing, and Alameda Research, with Genesis, Three Arrows Capital. And so they were trying to hold on. And I think what happened was, it was waiting for something to just tip that whole domino thing. And I think Binance, CZ saying was going to sell all of his FTT. And the article that came out November 2nd that basically looked at Alameda's, books, and something was off. Those two things just went whew. And what a lot of us didn't realize is that FTX and Alameda Research were just like Genesis and Three Arrows Capital and Celsius and all of these, doing all this backdoor stuff. And then you've got FTX and Sam Bankman-Fried running his corporation like a frat house where there's nothing on their books. They're hiring and firing and doing business deals in an app, on an app that deletes the text after they're sent. I mean, just stuff that you don't do in corporations, And so much was going on here. And okay, boom, there's all that stuff going on. Let's just say, wow, okay, that's crazy, a lot of crazy stuff. I'm really mad at the SEC. I'm mad at greedy people that try to take advantage of the crypto. But be clear, this is not retail. This is not you and me. It's not most of us that are in crypto working to try to make investments and build it up. These are large institutionals that are catering to larger institutionals that just wanted to make as much money as they could. And
right.
And so if there's going to be regulation, that's where they need to start. Regulate those suckers And, let's clear that out. So they're doing their thing, but now they're regulated. We can still do our thing and take advantage of this wonderful gift that we've been given by Satoshi or whoever. And this blockchain that's been around forever, but took an example like Bitcoin to create it and have the reality there, and then just all the wonderful tech open source software developers that took this and ran with it and created all these wonderful things like DeFi and the metaverse and NFTs and all these amazing things that, we're all going through this growth period. And so some people hate NFTs, some people love them, but it's still a wonderful, cool utility that didn't exist, 5 years ago even. And, it's got some growing pains. So, I was going to try to not throw it all out there, but once I get going, I can't stop. But that sums it up, really, as far as, there's other things that I'll probably, bring out. But I did create about a 20-minute video, and I didn't hold anything back.
I'll have to go and watch that.
I let Gary Gensler have it.
I love your rants. And, it is like, I think time's going to tell a little bit. Will it ever be completely transparent as to what has we can kind of like look at these separate things that have happened with this and like piece some of the things together. But it's like, it's interesting, he still is not arrested. He's still possibly planning to come and speak on the 30th. I don't know what that's about. I mean, it just blows my mind. And some people are saying, they're like, if he comes in to the United States isn't arrested within an hour, we know there is just true corruption going on here. And it's a lot of, we could go on forever on that. And
where's he supposed to speak? What was this thing about speaking? Like where, what?
Event. So there's an event on the 30th, and there are speakers at this event. I know there's Ben Affleck, there's a couple other people. And I don't know if this was already planned scheduled to happen. And I don't have the name of the event in front of me. I was going to have this article, but then something else came up that I wanted to share. But they're all supposed to come together and meet and have they're all going to be speaking at this event in the United States. And SBF is
he'll never do that. He'll never do that. He'd be stupid to do that. I can't believe that he wouldn't get arrested. I think he would. He's hurt too many people, and the regulators here are out for blood. And Gary Gensler he's now going to have to backtrack and do something significant because he's connected in a negative way to all this. Like, Gary, you've been meeting with this guy. Why didn't you have a clue what the hell was going on?
Yeah, it is interesting. And you mentioned that the balance sheet that was looked into, that was brought out. And I believe it was like a reporter, I want to say from Cointelegraph, that caught that.
Cointelegraph or Coindesk.
Okay, yeah, one or the other. And it's just interesting because it's like, okay, we have a journalist. So where is the oversight? And how was this not caught before? But that also kind of brings me into the article, or one of the things I want to share. And it does touch on, that there are regulations, like that the crypto overall community wants to come up with regulations that work for everybody. Like, they want to come up with things that work for everybody that's not going to push people out of the United States. Yeah. And that's what's happening a little bit. And so I do want to touch on that. And I can, if it's a good time to share my screen.
Yeah. Oops. Yeah, here we go.
And what this was, and are you able to see my screen?
Not yet. Hold on.
Okay.
Let's see. Here we go. There we go.
Okay. And if you want to bring yourself up, I'm not sure if you're up on my screen, but you may want to, because we can kind of talk about this.
We're up together. Yeah.
So this was a conversation, and I really suggest that everybody watch this because it really hits on some basic principles, and it also hits on kind of these same questions that are circulating from the mainstream media. So this is Anthony Pompliano versus a CNBC host. Do you know who Anthony Pompliano is, Scott? Do you follow him at all?
Well, isn't he the guy that was connected with Trump with Trump's thing?
Was he? Okay, I'm not sure. I know he has a following on Twitter. Like, he has a pretty big following, YouTube and Twitter. he's just come into my algorithm somehow,
Your
into my
algorithm.
videos. So I've only been watching some of his stuff for about a week, but he
He's
killed it.
Is he the guy with the American flag behind him?
Yeah, yeah.
Yeah, he looks familiar, like the guy that was connected. That's what I'm saying. I didn't know that he had anything to do with crypto or anything. But go ahead.
Okay, so he does write a daily letter. This is kind of his little introduction to over 200,000 plus investors about business, technology, and finance. He breaks down complex topics into easy to understand language while sharing opinions on various aspects of each industry. So I actually subscribed to his channel and then I unsubscribed because I thought it was more all on finance and crypto, but then there was like more on other stuff I didn't want to add to my algorithms. So, but anyways, super interesting article, and I kind of want to touch on this because in this, and it's always that, it's kind of that same attitude like you brought up from the mainstream. It's kind of like, you crypto people, like you're kind of at fault. There's something to blame for you guys, even though this is CNBC has like this investment segment now that they've added to their channel, and that's what this is. And they talk about Bitcoin pretty regularly on it and have people who are pro Bitcoin. And that's kind of what this is addressing. So the host here, his name's Scott, he asks the reaction to Pomp, as we'll call him for this, what has happened with FTX? What was his reaction? And he pointed out 3 things. Number 1, people are shocked. Number 2, major players are shunning regulation. They want to run and hide in other jurisdictions, meaning that's kind of what's happened up to this point. And then number 3, SBF was regulated in some regard, but was also engaging in Washington with regulators. So that kind of threw, when you kind of think about that, it's like he's not even in the United States, but he was also engaging heavily in Washington with regulators as well. So people are focusing on that. He then explains conversations in private of many people in this industry. So the private conversations that he's had. So number 1, this is shocking. And then number 2, people are very surprised at how well some of the assets are holding up, given that the second largest crypto exchange in the world just imploded and had to file for bankruptcy.
Now, let me stop you there for a second. These are people within the crypto industry saying this?
So yeah, this one is people who he's had conversations with because he's very well connected, and he has a podcast, and he's just really well connected. So he's kind of just summarizing what the common theme is of what his conversations are.
That number 2 point surprises me, because if you're in crypto, you would know that they're not. You wouldn't be surprised at everything else imploding. But yeah, go ahead.
Well, surprised that some of the assets are holding up.
They shouldn't be. They shouldn't be surprised. That's my point.
Oh, they shouldn't be surprised. Yeah. You're right. And then, so what's next is kind of the number 3 question. Will this chill institutional and retail interest? What will happen to some of the technologies that people have been really excited about? And what will the result be for other infrastructure players? And then lastly, deep conviction that Bitcoin will continue to thrive in the future. I don't know about you, but I've personally had a lot of these questions come through my mind. I'm like, man, there's all these really big projects. And then, I'm like, no, this is still going to keep happening, but it may look different. And it'll be interesting to see. But I've kind of had the same questions, like, will this put rest to them to kind of have to be more cautious before coming in? Yeah. And what will happen to all of these big projects? We had talked about after the Terra Luna crash, within at least our community, Scott, we had talked about how we would see like 99%, like as a rough estimate, like that we were going to see so much of the coins and the tokens and all these projects and everything was going to be wiped away, which this is starting to feel more like. We're getting there almost.
Projects being wiped, like what kind of projects?
Well, I'm just all of the ones, like, so we have all of the listed, like if you go on CoinMarketCap, I mean, I don't know how many there are. There are about 3,000, even more of these different projects that some have meaning, some don't. Some may be stronger and play a stronger role than others.
Right.
and what will kind of remain through this.
Yeah. So what you were saying was that there was thought that after Terra Luna, a lot of these other coins projects would crash. Is that right? Because that wasn't my take, but and I guess I'm not sure why. Why would they?
Well, so one of the common themes, at least in the conversation in our group, and then I'd hear it around, is right after the fall of Terra Luna, that we would see a lot of crypto projects, a lot of the gaming, a lot of that stuff being washed away. Like it wasn't going to survive what was going to come, and that we were going to see a lot of big players even be wiped out that we wouldn't expect. And I've kind of held on to that belief. So after hearing that, right, and nobody knew for sure, but after hearing that, after the Terra Luna, I kind of held on to that belief. And so when we started to see after Celsius fell, it still didn't feel like that was it for me. I felt like there was still more to come. And now I feel like we're kind of like getting into the thick of it. Like, and not that anybody projected this exactly, but I remember hearing that and I was like, man, there's still more to go. Like in my mind, I've kind of held on to that belief. Doesn't mean it was going to happen.
Well, and maybe you'll get to this in a minute if it's changed now, but I'll just get my 2 cents on that. I guess what I would distinguish is that I never really thought that projects per se, or let's say DeFi projects or new alt ones, or the people that are trying to create and build in the crypto space, build for the future. I never thought that would be in jeopardy, only other than if and it kind of depends on after Terra Luna, but it was pretty quick. In my mind, a couple months after that crash, I mean, things kind of got back to normal. I mean, we were in a bear market. I get it, but we've been in bear markets before, and what they always say, in a bear market, you should build. And so my thought was, we're going to build. People are going to build. They're not going to worry about investments, whatever. Other than if the whole market gets really tainted, they couldn't get investments, right? And people wouldn't want to invest in the token anymore. But also, I think what came out of the ICO era of, say, I don't know, 2018, 19, was that all these projects were trying to create ICOs and get people to invest in their token or coin, and that was going to fund the projects, and that went away. So by the time I get into crypto, say 2020, pretty heavy, it's know that you're going to have to go out and get VC funding anyways, so it's not all going to be funded by an ICO anymore. You've got to get VCs. So if people believed in the future of crypto and the future of blockchain and that, which I really don't, I was never worried that would go completely down, they would just be building. Now, what I didn't understand enough, but I had an inkling in my mind and sort of hoping, was that companies like Three Arrows Capital and Celsius, that those would have a hard time, and that new people coming in that wanted to attract institutional investors, that would be some kind of a little bit rocky. And now I see it in my mind very clearly what this is, and the huge delineation between what I consider projects that are tech people trying to create future technical projects on the blockchain for the future. Those are going to thrive, and I think they're going to still build. But you've got these other people that aren't building anything. All they're doing is trying to suck out capital and money from everybody. And it's traditionally these big institutional investors. So these companies set up shop. They don't even deal in retail that much. So to me, they're what's the word I'm looking for? They're like a terrible virus or something, right? They just sit there and they suck it in. They suck in and take all the energy and all the good, And so that's what I'm saying. I'm really frustrated with that, and I'm frustrated that was allowed to be exposed and affect everybody. And here's the thing: FTX was one of them. I didn't think they were. I thought FTX was like Coinbase, and they were this, because they dealt with retail in converting, your fiat into crypto. And I thought, oh, they're part of the good guys. And now I realize they were part of the bad guys. They were just like all the other institutional type organizations feeding on crypto. So so I guess I just get back to that. And so for me now, and then I'm going to ask you the same question now, after this second leg or third leg, I'm not sure what you'd say, of exposure and failures and bankruptcies, and I don't know if it's cleaning out, but if it's not, I hope it continues to clean these. In my last video, I used the word predatory institutional investors and companies. Predatory, and if it can clean those out, now there will always be people that will want to come in and take advantage of these situations. But if we move regulation into there, they won't be able to as much. So this is what I see really focusing out of this, is that we clean that out and we distinguish that from everything else going on in crypto. And it's probably not that simple, but that's how I'm choosing to view it, is really just trying to get it kind of simple and black and white. You've got projects that are building gaming, including metaverse, including NFT, anything that uses blockchain and is building for the future. To me, they have the green light. Hopefully, that this doesn't taint that. And that's where I feel now that they're hopefully, and we can distinguish even more, because if I was confused, a lot of people were confused in this, and who is crypto right now? The mainstream media hasn't figured this out yet, but maybe they will. And I've got an article to show that sheds some light, that there is some light at the end of the tunnel on the average not crypto person understanding it. But so how do you feel then? And I kind of hijacked this, but this really kind of got me, was, how do you feel now about projects?
Yeah, I'd have to say that my views align with yours. I do think there might be some smaller ones that just fail because they just can't withstand it.
Yeah.
But I do think, I'm hopeful as well. And I think, this was as bad as of a thing. That's kind of where I go back to that crisis. There's that opportunity with it.
Yeah.
For so many people, and as disheartening it is, because it's just frustrating. It's also, I think, going to clean it up and shed light, and hopefully, I agree with you. I think I align with you 100%. I think a lot of the projects that are being built right now, and I remember hearing this right after Terra Luna crashed, that some of those gaming ones weren't going to survive. That may have been, NFTs, and these ones that just it was a timing issue, where there's ones that are being built right now that have a better chance for survival, but just because of the timing. And so, I have to agree with you. I have to agree with what you said.
Yeah. So, and before you go on here, let me just say, I did a quick search on Anthony Pompanelli. He wasn't the guy I was thinking of that was connected to Trump. So I just want to get that out of the air.
I'm glad you cleared that up, because that may taint some people's views.
Yeah. So that's not the same guy. So go ahead.
Okay. So he continues to say, Pomp, that the sentiment here is that Bitcoin is going to usher in a better future. That is the promise of the technology. And he goes in to say, it is going to restore the ability to maintain your purchasing power over long periods of time. It is going to bring economic empowerment to billions of people around the world. As we have seen many times in the industry, there are ups and downs. There are things that people try. In many cases in the past, the implosions of the failures that we have seen have just been people experimenting where it didn't work. This seems to be something else. I think we will get more information on that over time. And that's something else. He's referring to FTX.
So I want to comment on that, because I find that interesting. I've thought a lot about that. Is that, what's the difference between these shady players? What's the difference between fraud? And what's the difference between projects that have good intent, that are, for all intents and purposes, are good people, but their projects just don't work out? The tech fails, or the proposition that they came up with just wasn't going to quite work at the time. And I think it's important in a way to try to distinguish that, because again, especially during the ICO time, and again, I really wasn't that heavily involved during that time, but there's a lot of bad blood for people that were during that time about the rug pulls and the ICOs that just went to nothing. And I'm sure that in there were some good-natured, goodwill people that just, their stuff didn't work, And I don't know. I just want to. I really, what this has done is this whole FTX thing has focused me on who are the good guys, who are the bad guys. And I usually don't think like that. I'm a pretty life is kind of gray person, but I'm I really, because there's so much confusion and there's so much going on and so much talk and reporting, for me, I just have to kind of get it black and white. And I'm really, trying to, who are these bad guys? Who's causing all this. And I really think it's these institutional CeFi players trying to take advantage of crypto. So
bringing their ways into it, and then kind of taking people along with them, because when you're rolling with those people, what happens is you almost feel like, this is just how I perceive it, how I think it could happen is like, then their way kind of becomes the only way, or you lose.
Yeah.
And then you can kind of get wrapped up in, and I think this could have happened. I don't know for sure. Is one thing I think could have happened with SBF, of being kind of like, he was born into this way, and then kind of may have felt like he would have some cushion with all of this, some protection, didn't quite see beyond it. And then you get rolling with Gary Gensler and kind of with these regulators, and just kind of being like, oh, this is how the game is played. This is how you play the game. He kind of touches on that a little bit in some of the things that he's said.
No, he has. FTX was in that tweet article, or that tweet interview. There was definitely this hint of, the problem here is I got caught, and I'm paraphrasing, but there's a sense of that as long as he was winning, he was the hero, and then he got caught or whatever. Or he does refer to CZ of Binance, beating him multiple times. And that just sort of indicates that he'd have been just happy to continue to do what he was doing as long as nobody found out. And that's not cool. That's not okay.
Right. Right.
But I can see that's one of the things I always took away from the 2008-2009 world financial crisis, was that the big banks at the time, who were engaging in all these really risky, derivative loans and the real estate backed loans, the view that came out of that a lot from these people was that that's what everyone was doing. Everyone was doing that. In fact, if you weren't doing that, you were considered stupid or ignorant, or you shouldn't be in this business because this is the way it's done. And that just perpetuated bad behavior, risky, bad behavior that in the end cost a lot of people, burned a lot of people. And I think when you're caught in the middle of the exuberance of stuff like that, you don't see yourself as the bad guy. And it's a human nature kind of thing. We've all seen those studies in psychology where, if you're in the room and they divide the room in half, and if, they ask a question, and if more than half of the people raise their hand, even if it was wrong or whatever, the minority will kind of want to be like the rest of the people. That's just human nature. And so when you're caught up in that, they don't seem like they're the bad guys. And yet it really causes a lot of pain when these things crash. So.
I totally agree. And so going back to this, he says, we need to have these moments because it creates resilience, but it still sucks when you go through it. And that was because, he had tweeted something that says, I know that nobody really knows what's going on. And, to everybody, like, I'm sorry, this sucks. And the host, of course, was like, well, why are you saying that you're sorry? And he's trying to pin Pump for even talking about what he's invested in and talking about this, saying that that's misleading the public. So there's a lot of that, and I didn't really go into that, but there's a lot of that in that conversation as well. And Pump just nailed it on every point here. I really encourage, again, I want to emphasize that for everybody to watch this. Such a good conversation. And I'm only highlighting specific points. And then he says, Pump says, if you go back to the beginning of the pandemic, when the undisciplined monetary and fiscal policy was going to debase the dollar, inflation would not be transitory, and Bitcoin would be an asset that you would want to fly to look for safety. And then he says, if you go and you look, Bitcoin has outperformed Berkshire Hathaway. It's outperformed most assets. It's outperformed almost 100% during this period of absolute, insane, undisciplined monetary and fiscal policy. And so, yes, it's down 75% over the last year, but Bitcoiners continue to hammer the same point. Dollar cost average, long-term hold into a finite asset where demand will increase because of the debasement of currencies and what we have seen as that continues to play out. And that's where the host goes in. Isn't it dangerous that you're putting, because Pomp is saying, I'm putting my money where my mouth is. Don't read what I'm saying, like watch what I'm doing. And he's like, oh, I believe you. But he's like, it's dangerous that others are putting their money where your mouth is. He says for Bitcoin to go from 69,000 to where we are today, he then points out that Munger has considered crypto rat poison in the past, said just this morning of that chat that crypto is rife with fraud and delusion, that the country does not need a currency that is good for kidnappers. You just constantly hear that. Another known investor saying that crypto is wild like the Wild West. And it's always the Warren Buffett, the Charlie Mungers, who are, they don't like Bitcoin, they don't see it. And you hear that regularly. Yeah. And Pomp says, first, if you want to talk about pure performance, DoorDash and Shopify are down 75 to 90%. They are tech stocks that are openly talked about on financial networks that are down more than Bitcoin. So would we argue that because Shopify is down, that Shopify is over? It's an argument without any legs. Charlie Munger and Warren Buffett, they do not understand the technology. To confuse Bitcoin and crypto, one is a false comparison. The second is the US dollar is used more for money laundering and criminal activity than Bitcoin. There's a former CIA director that came out with a study to show that. People want to have their headlines, their Bitcoin criticisms, but as you continue to look at the technology, this is a decentralized peer-to-peer network that has a great track record for protecting purchasing power over long periods of time, and Bitcoiners are trying to usher back in timeless investing principles. Warren Buffett and Charlie Munger say this themselves, to buy great assets and hold them forever. That is a Bitcoin principle. Dollar cost average into great assets, that is a Bitcoin principle. Pomp believes that if Charlie Munger and Warren Buffett were 23 to 35 today, that they would be Bitcoiners. The difference is they don't have the opportunity to allow for decentralized software-based money to come along to store assets. Bitcoin has outperformed their investments over the last decade, and it has continued to during this period of undisciplined monetary and fiscal policy. And I believe that they will continue to hate on Bitcoin and will continue to show people that they don't understand it.
Yay. Good stuff.
And just the last little bit here, the host argues that if there is a comparison to crypto and various stocks, you can do an analysis on fundamental analysis on a company's projected earning power over a set period of years. Decide what the correct valuation is to pay for that future growth. You can't do anything of that with crypto, he says. You can't do any of that with Bitcoin. And Pomp says, I don't believe any of that to be true. You can do a fundamental analysis. Take hash rate as an example. Bitcoin is the most secure computing network in the world. Hash rate is at an all-time high. Price is down 75%, and hash rate keeps climbing. There is a dislocation between price and fundamentals. 67% of the Bitcoin that is in circulation today has not moved in 12 months. The price of Bitcoin fell 75%, and 67% of the Bitcoin did not move. We are watching the greatest battle in 2022, where it is Bitcoiners and the hodlers versus the macro environment. Pomp is betting that the Bitcoiners will outlast the macro tightening financial conditions, and ultimately the Federal Reserve and other central banks around the world will have to return to loose monetary and fiscal policy. And what we will see is that hodlers will still be hodling. Yay. They will still be Bitcoining. And ultimately, the people who don't understand the technology will continue to hate on it. But Bitcoin doesn't care. It produces block after block after block of transactions. And it is the only monetary policy in the world over the last 3 years that did not change. And I'll just leave it right there. And there's so much more to that. Please go watch it. And finally, the host is like, "Okay, we're just gonna stop," because he just was getting like totally smashed with every point throughout this conversation. But it was so good.
I'm glad he had really good points on there, and I haven't been able to articulate that well, and so that's good. The difference. And when I have this argument, what I really sort of leave it at, and it's not a good backing, but I leave it at that the technology is different, that it's based on technology, that it doesn't have the same valuation as traditional finance does, and if you don't really understand what's behind it, then you don't understand the value, and so you keep trying to compare it to stocks and businesses. And the argument of this fundamental analysis. That's always brought up, that there's no business behind it you can do fundamental analysis on. And part of it, I would say to that is, well, look at how that's come, look how well that's done for you in the past. Yeah, sometimes it works. A lot of times it doesn't work. Companies that have all this great valuation, when the economy tanks or their product gets hung up in logistics because of a pandemic, which you could never predict. How did that work for you? What did Bitcoin do during the pandemic? It just kept chugging along. And when they compare this, like, yeah, but it's dropped 70%, isn't that irresponsible of you to want to prop up and talk good about a asset that dropped 70% or so? And I'm like, well, that happens in traditional finance too, and it goes to zero, and they go bankrupt. Bitcoin can't go bankrupt. There's no business. There's no people involved in that. It's a technology, and they just don't. They can't, because they've never seen anything like it, and they haven't taken the time to understand the technology. And then the other side of that too is the dollar. I always try to bring that up, and yet I think people that have been in traditional finance so long, they don't know anything other than the dollar. And even if they've been around before 1971, when we went off of the gold standard, it didn't affect your day-to-day life. Americans and the world still went on. The dollar was still the world currency. And so everybody had no choice. So you just dealt with it. And as inflation eroded it, you could kind of deal with that, because your employer would give you a cost of living, adjustment, a couple percent a year. And even if you didn't, maybe you bought 2 less eggs than you did, because at 2% or whatever, it was just slowly eroding. And then again, if you lived through the inflation years of the 70s, and then now we're here again, you really have to think about it to really understand how impactful inflation is. And most people don't, because they still have a dollar in their hand. It's not like somebody chopped off part of the dollar. I wish they would, because then they would get it. But that's literally what's happening, is like you're cutting half of the dollar, in half. And people don't get that. And so when you realize that Bitcoin can never be deflated, and that if you just match the two up over the next 10, 15, 20, 30, 40, 50, 100 years, I mean, it's not even comparable. The dollar will be in the negative zone. It won't even be around in 100 years. I'm convinced of that. We'll debase down to zero. The economy, if something drastically doesn't happen with all the world economies, they're gone as we know them now. So, for me, it's simple to embrace Bitcoin now, but also really simple to think that something like Bitcoin is going to be the future. So this is a really good article. I'm really so glad you brought it up, because this is something that I have to deal with in my life a lot. My dad was a traditional banker his whole life, and in his later 80s, and he's now seeing all this stuff on the news, and so he never cared to really discuss it before, but now it's in the news, and it's kind of scary to him, and he doesn't get it. And we've had some good conversations and some tough ones, because he doesn't get that. He's very old school when it comes to that. So I'm living that, like, in my life right now, and these are some good points that I'm not sure my dad will get it, but I do think that there are some reasonable people that, with good arguments like this, maybe will start to at least soften up on this Bitcoin is evil or crypto is evil scenario.
Well said. And it happens to a lot of people. There's been a lot of people who have totally, I don't think once you go over, you go back. Maybe some people do that don't understand it fully, but once you gain that understanding, like, oh, okay, like, yes, and then people are just like yelling it from the rooftops. But yeah, and there is that number, I think it's the age of 35, that they say that once you hit 35, you're less likely to accept new ideas. I mean, I'm stubborn as all hell. I'm not going to lie. I mean, I look at myself, I'm like, man, what would I think if I was like Warren Buffett? I'd probably be the same way. I could easily see myself being the same way. Doesn't make them bad people.
Right,
just stuck in their ways. And yeah, so, and even Pomp in this, he acknowledges that Warren Buffett is still the best, the most successful investors that there are, and isn't dissing them on that, but just kind of like, yeah, this is just what it is.
Yeah.
And so, and it is, but it is, once that switch is flipped, it's kind of switched on. And I think it's such a difficult thing to get across. We're going through these so many times and we're still here in this conversation, which I thought was laid out really well. And there's so much more, like I said, please watch it in full. But it does, it's like, no, like it's such a difficult thing to get across to some people, but I get stuff.
And like I said last week, I'm about to launch my course, and I'm I really want to help newbies understand this, and I want to help them understand all of Bitcoin. And yet, I'm a little nervous right now that maybe now's going to be an uphill battle. But I think there's enough people out there, and if I can get them on the phone, hopefully I can convince them that I get it, that it's scary. I understand. And that's what I'm here to do, is to help you at a slow pace understand that it's not so bad and that there are some really good things. And but it's also a new industry, and there's going to be lots of change. And if you are a patient person, even kind of patient, this will be really good for you. If you're not at all, and you're not impatient and you're not willing to look at really look at something new or get out of your comfort zone, then it's probably not for you. Well, I don't know if you know, but it's over an hour, which is crazy. We zoom so fast. Right before we leave, I want to share my screen and just do one quick, also ending on a really good note. All right, so this is Congressman Tom Emmer, and he is a representative from Minnesota, and he has really said some interesting things here. He says, "This is not a failure of FTX," Emmer said on Tuesday night Fox Business broadcast. "It's a failure of centralized finance and a failure of Sam Bankman-Fried." I love it. I mean, he really, to me, just boiled it down on the two these. Don't blame this on crypto. Blame this on Sam Bankman-Fried. And this is where I really got in my mind this whole concept of these are people that probably started in centralized finance that said, hey, I can make a bigger killing in crypto because it's not regulated, and I can do what the heck I want. He says they as the SEC, were working with Sam Bankman-Fried and others to give them special treatment from the SEC that others aren't getting. Oof, that's a big statement. That how he knows, or he has some insider information that they were going to be looking at giving Sam Bankman-Fried and FTX special treatment. Whew. And he goes on to say, the congressman reserved much of his ire for the SEC chair, saying investigating these firms is what Gensler is supposed to be doing, and asking where was he on Voyager and Celsius and Terra Luna and more recently on FTX. The congressman then asked why the SEC chair was going after good actors in the community and working what he called a backroom deal with people doing nefarious things. Oh, that's so good. That's exactly how I feel. And it's like the hardworking people that are building and creating for the future on this wonderful blockchain technology. Not only is Gary Gensler out there just shooting from the hip to find anybody he can get in his crosshairs and shoot them and sue them, whether they be project people creating projects or like XRP or any of these great projects that have such great value and utility, when they were letting these guys, organizations like FTX and Alameda and Voyager, just let them just fraud and run away with and just make really bad decisions. I mean, that is just so frustrating. So Sam Bankman-Fried was pushing special treatment legislation through Congress. He said, and when it was finally revealed what it was, that the industry started raising red flags, and that's when this thing came apart. He says, we need to get to the bottom of this. We need to understand why Gary Gensler and the SEC were not doing their job, Emmer said. We need to understand how this was allowed to get to the point where people's savings are getting hurt. Why is Gensler going after these projects that are trying to create for the future, letting retail investors get crushed in a company like FTX, and giving Sam Bankman-Fried maybe special treatment or whatever? But the biggest thing to me is why whatever Gary Gensler seems to be pointing his attention to in crypto is just doesn't seem to be the right place to be pointing the finger and pointing his gun or whatever he's doing. And that to me is extremely frustrating. But let's just say that hopefully this wakes up everybody and it focuses the attention. It will focus attention on regulation, but that it's my hope that really we start to see the delineation between what I just call the good people of crypto working for the future and these predatory CeFi institutional organizations dealing with just institutional people, not retail for the most part, trying to make the most money they can. Another point here was interesting. He said one of the many entities affected by the bankruptcy of FTX was the Ontario Teachers Pension Fund, and it had over 95 million invested and stuck in FTX. It says that investment represents only 0.05% of its total net assets and will have limited impact on the plan. And I just love that statement again, because there was a lot of, again, on the CNBC and Fox Business News, which is on all day here at our house. my dad has that all on. This was pointed out. How could these evil people take advantage of the Ontario Teachers Pension Fund and lose all of their investment? I didn't realize this, but it's a fraction of it. Now that doesn't make it right. It just, again, the media used something and blew it way out of proportion to make crypto look bad. Says Emmert reiterated his belief that the issue was not with cryptocurrency or decentralized finance. This is about centralized finance, which needs to be brought under regulatory umbrella, and Gary Gensler has done nothing to make that happen. Decentralized finance is not what it's about. It's not about crypto industry. This is about Sam Bankman-Fried and regulars. Amen, baby. And that's what I have to say with Congressman Emmer. Thank you, Congressman Emmer, for that. You have a big fan here. And we need more people like that. And we need Congressman Emmer to talk to some of the other senators that are doing some of these other bills, because pretty much everything he said in this little article, I totally agree with.
Mm-hmm. Yep, that was well said. And it is the light to know that that's existing somewhere. You know, it's like, gosh, you know, there's so much corruption around, but there's still the goodness, guys. We got to remember that.
It is. We do have to remember that. Yeah.
We're going to work our way through all of this.
We are, and I still love crypto. And like I say, again, I'm good guys, bad guys. I don't know if that's a cop-out or not, but I just think there's so many good people in crypto. And the projects are trying to make the future better. They're trying to, you know, open up finance to the millions of unbanked people, to the to be able to earn a decent interest rate, to be able to catch up on your retirement right now with the economy bad. There's still a place to do it. I'm doing it right now, earning 20%, and in relatively safe way in crypto. And so it can be done. There's a lot of good things. DeFi is humming along great. NFTs are cool, are interesting. I think are still unknown. I think they're still going to morph into some amazing things, but it's in a way, if you just get over the high priced JPEGs and you start to think, what is really an NFT and what does it allow us to do, take ownership in areas that we never could before. That concept alone is fascinating and will spawn millions of great ideas. As I mentioned last week, there were gamers that were, putting down, blockchain gaming because it wasn't fun. Go check out Animoca Brands. Go check out some of these AAA games, Illuvium. They not only are fun, but they allow you to actually take some ownership. And again, NFTs, which are really the ownership part of these games, right now they may be primitive, just like you can own, a skin or something that you could put on one of your players. It's going to evolve into amazing things. And then the fact that you are learning DeFi and how to operate in decentralized finance as you're playing these games, that teaches you finance. It teaches you financial ownership. What's wrong with that? And then of course the metaverse, which is my favorite right now, which is just completely unknown, and Web3, which also is, and I don't mean completely unknown, but I mean you've just got lots of room to grow. And this is taking the good out of Web 2 and pulling out some of the bad stuff that we didn't really realize. The fact that these companies sucked our data from us, that we didn't even really understand what was happening until it was too late. And now Web3, based on blockchain and ownership, is going to try to claw some of that back. So there's just so much good in crypto still. And that we've got congressmen who are there and really can make a difference, being able to say some of this stuff. So I think we did a good job, Brianna. We ended on a good note. I'll leave it up to you to kind of add the last bow.
Yeah, the last bow. The last bow is that this isn't financial advice, but this is encouragement for education. And look no further. We have someone right here. Scott's on fire today, and he has a course coming out. I mean, how exciting is that? And this is the time to build. We've said it over and over again. Many people are scared off during these times. And when things are hopping, that's not going to want to be the time where you want to jump in and learn. Like, you want to learn now. And now's the time. So it's exciting times. And, we're going to learn so much even through what's to come with the regulations and how things are going to transpire from there. It's so exciting to be a part of this and all of the opportunity that this is providing, for everybody. So yeah, I just encourage everybody who hasn't, if you're watching this, to just do some research into this yourself and learn, and continue to grow in this space. And don't be scared off. Don't be scared off by mainstream media or headlines, and just take accountability and responsibility to learn for yourself and develop your own understanding. Because as you can see, it's exciting. We're always excited about it, even during the midst of all of this chaos. We're seeing the brightness here. So yeah, I think we did good today, Scott.
Yes, good bow, nice bow. Well, thank you everyone for watching, and stay tuned. Come back. We got you. We got your back.
We'll see you all next week. We're here live every Friday. So
yeah.
We'll see you next time.
Bye.